many tools, too much stress, and way too many bills.
Odoo replaces it all. One connected platform for every part of your business, so you can work faster, smarter, and for less. Odoo, the only software you'll ever need. Try it free today at odoo.com. That's ODOO.com.
Hey there, everyone out there. Welcome back to Real Estate Real and Unscripted with Nicole. I am glad to have you back here. Thank you for joining me. On today's episode, we are going to be talking about another avenue of financing, and that is going to be specifically FHA loans. And what do they look like? What should you know? Dispelling myths. So with me today, I have a dear friend and guest of ours who is a loan officer with Fairway Home Mortgage, Cliff Bernstein. Thank you so much for joining.
Thanks for having me.
It's a pleasure. It's a pleasure. So we're going to go into that specific type of loan financing. And because this show, the goal is to be able to educate and really dig deep into things. That's why I kind of divided it out. And I'm speaking with various lenders with respect to the different type of loan options. So Cliff, thank you for joining me. Tell me a little bit about yourself.
Okay. Well, Nicole, I've been in the lending and finance industry in April, I celebrated 30 years.
Wow, really? Whoa.
30 years. Can you believe that?
Yeah.
Yeah, that's a long time.
That is a long time. That comes with a lot of knowledge.
It comes with a lot of knowledge. It comes with a lot of scars.
Yes, scars.
Yes, it does. Yes.
Yes.
But a loan officer with Fairway Home Mortgage. You know, we do everything. We do conventional, FHA, USDA, VA, no-doc, non-QM, bank statements, DSCR. So we do it all.
And it's a direct lender.
We are a direct lender.
Yes.
So
for those,
yes.
not the non-QM stuff.
Which means, basically as a lender, you know, whether you come to myself, you go to Wells Fargo, JP Morgan Chase, guaranteed rate, cross country, we're all lenders. We're all direct lenders. We're all going to close your loan. We're going to fund your loan with our money. And after closing, we all sell that paper to an entity called Fannie Mae.
Yes. So that is the difference, right? So we had on the show brokers and then direct lenders.
Correct.
And so you touched upon like what that difference is, right? And so as a broker, if someone's a broker, they will work like wholesale through the end lender. And as a direct lender, you're turning it yourself. You're funding it.
Correct. Within my career, I worked both sides. I've been on the broker side. I've been on the lending side. And a broker is basically just a middleman between their borrower and the lender.
Right.
To facilitate that origination.
Got you. So FHA loans, we're going to talk a little bit about that. Whenever I say FHA, and sometimes, there's like stigmas out there. And so my goal is to really break that. I've had situations where I'll have a listing and an agent will be like, will your seller consider FHA? And I'm like, what kind of question is that? Why? At first I was like, why? And as I, years ago, kind of figured out people are very weird about things. They'll start rumors or they'll start things, FHA loans come in lower on the appraisal and, they're more difficult because blah, blah, blah. And, we're going to be having a guest talk about VA loans as well. There's just a lot of lack of knowledge out there. And I think also from what I've seen in my experience, especially with working more so in the older generation, I think back in the day, there was a mentality of you had to put down all this money and that was a good buyer. They were qualified. Because I'll speak to a lot of my senior clients and they're like, they're only putting 3% down. That buyer's not qualified. And I get that all the time. It's interesting. So, so you'll see people say, FHA, you don't have to do 3.5%. That's really not a qualified buyer. What is some of this stuff out there that's stigmas that really is nonsense?
I'm so happy you brought me on and that we could discuss this because the FHA financing is the most misunderstood financing product in the market right now. I would love, I'm glad I have this opportunity. We could debunk all the misconceptions because it's really, truly one of my most favorite loans to originate. And I'm going to tell you a story.
Yeah.
To your point, but in a bit. But let's touch on a few points. I mean, you mentioned the appraisal. Years ago, that may have been true. We're talking maybe 15, 20 years ago. But most recently, in current events, realtors will come to me. They're concerned about taking an offer because of the appraisal. Oh, well, there's a problem with the roof. There's some problems with the
unpermitted garage conversion.
Whatever the issue
in an HOA condo association villa community.
But right now, it's an even playing field.
Yeah.
If it's a problem for FHA, it's going to be a problem for a conventional / conforming Fannie Mae. So there's no different. The appraiser's not looking at that appraisal differently. He's not going to value it differently. If it's a health and safety issue for FHA, it's the same issue with conventional.
Yeah. So conventional loan isn't going to look past the fact that the wall has mold on it and there's like an electrical socket hanging from the ceiling that's open, sparking.
Correct. Correct. So right now, the only difference on the appraisal, when one does an FHA appraisal, that value will stick with the property for 180 days. Mm-hmm. So that's the difference.
Which means that if your buyer falls apart and doesn't close and you go and take another buyer that is FHA,
correct,
the value of that appraisal will stick. They will still have to do another appraisal, and the appraiser will have to come out and check and make sure that the house exists and is still okay, but they're not changing the number.
No, the number's not going to change. It's going to stay there for 180 days, which could be a positive, it could be a negative.
In this market,
it is what it is. But if FHA appraisal was done and now you have a conforming or conventional buyer, that guideline does not pertain to that issue with if you're doing FHA to conventional. It's only FHA to FHA, and that's it.
Right.
Yes.
Got you. So what are some of myths? Like one myth: FHA loans are for first-time home buyers.
There's FHA. It's not just for a first-time home buyer. Let me tell you a story.
Yeah, tell a story.
To your point, I had a file, and again, on the surface, coming to me, wonderful buyer. He was purchasing. I believe the purchase price was $980,000. It was right here in Boca Raton. He was putting down around $600,000. He was doing close to a $400,000 loan. Mm-hmm. So right off the bat, that looks like a good offer, right? Hey, it's $980,000. He's putting down $600,000, 800 credit score, very, very good income. So the DTI, the debt to income, was was pretty low. It was a low DTI, and everything was fine. But then sometimes things turn around. Things are not disclosed properly. So, for example, he had another loan on his credit, which he was a co-signer for his son. So basically, I spoke to the borrower. This is, it all happened very quickly. And he assured me, no, the son makes the payments.
Right.
He's been making the payments for the last year and a half. Fine. So basically, based on that guideline, if you're a co-signer on a loan for somebody that's also obligated on that note and that other person makes the payment, we could exclude that debt.
They have to prove that they've made the payment.
They would
have to show
over 12 months that they've been making the payments.
Money coming out of the person's
12
account.
12 months. If it falls short by a month, it's going to be an issue.
Okay.
It's 12 months.
Okay.
All right. Contingent liability.
So that brings up a real quick point. Like if you are co-signing with somebody and you're the parent or whatever, and you're paying things, you want them to pay that out of their own account. You don't want them to potentially give you cash and mom's taking care of it. Cause I had a situation like that too, where they couldn't prove it.
Well, this was similar.
Yeah.
And I'm like, are you sure he's been making a payment? No problem. For the last year, that's he's making a payment. Okay, so what I did was I had to collect the 12-month bank statements from the son. While we're in contract, I'm collecting the 12-month bank statements. Would you believe it's a joint account?
Oh, no.
It was a joint account.
Oh, no.
But he pays. He's been making a payment. Look,
out of an account with both of their names on it.
It's a joint account.
Yeah.
Well, what we're going to do? Well, we'll open up a new account. Well, we can't.
It's too late now.
It's too late.
Yeah.
You can't unring that bell. So what we did, on the fly, we had to move it to FHA because all of a sudden the debt ratio is now over 50%.
Right.
So this beautiful DTI, this low loan to value loan, 800 credit score, a professional, a W-2 employee, all of a sudden now is going FHA.
Right.
Not a first time home buyer, obviously. The realtor said to me, well, how could we go FHA? He's putting down more than 3.5%.
God help me.
So this is the misunderstanding. Well, you're allowed. I mean, there's no maximum you can put down. There's only a minimum.
Yeah, there's minimum.
It's not a maximum.
Yeah.
So, I mean, that's.
So, yeah, FHA allows you to have a higher front end, back end ratio. So speaking about that, like, what is that? What are the ratios, right? So you have the ratio of the housing ratio, then you have the total debt ratio.
Correct.
And conventional versus FHA.
Yes.
How you move them to that was because there was a lot more of a wiggle room
On the debt to income ratio. And just so, if we're looking at a total debt to income ratio, we're gonna consider everyone's monthly obligations, their car payments, their student loans, their monthly credit card debts that they don't pay off the balances, plus their total new housing payment. Mm-hmm. We're gonna get that number and we're gonna divide it by their gross monthly income. Now on conventional, and we could get into more on conventional, we could always, if you have a high credit score, the debt ratio is a little lower, we can always stretch that to 49.99%.
Yeah. There's compensating factors to be able to do that.
Right. Because typically, if you go to a retail bank, they won't go that high. They won't exceed 43% in a lot of cases.
Yeah, and that's where you'll see online when you Google what's the max ratios for conventional. A lot of times you'll see the 43, but I know that you can technically go up to just under 50.
That's just an in-house.
That's like an overlay.
That's
exactly.
an overlay by that institution.
Right.
Fannie Mae, we run what's called a DU approval. We'll get into that at another time. But as long as a DU approval accepts that ratio, we'll close that loan. We don't have a ratio. But I'm here to tell you, on a conventional loan, you will never, ever be able to exceed 49.99%. You'll never get, once it hits 50, it's not getting an approval. But with FHA, I've gotten approvals as high as 57% on a back-end ratio.
Right.
So that's a big difference.
So people get moved into FHA to help open up the ratio
for different reasons. Now, don't get me wrong. I'm always looking when I qualify a buyer, I'm always looking to go conventional first because in my mind, it's a better path because it's less expensive overall on a monthly basis, and we could talk about because of the upfront mortgage insurance. With that said, FHA, in my opinion, is always the second best option. But for some and for a lot of borrowers, it's the only option.
Right.
And when the only option is the second best option, that's a pretty good option.
Right.
So, but yes, we'll stretch that up. We'll stretch it to 57%. And but there's but people just don't understand. They just don't understand why we're going FHA. So it's up to me to educate the professional, the realtor, or the client,
right,
on that.
So with FHA, I know that you have when you get conventional and you're putting less than 20% down, you have PMI, right, mortgage insurance.
Yes.
And then when you hit that, when they determine, like, let's say you bought it for $500 and you put down $20,000 or whatever, the 3%. I'm sorry, I can't even do the math. 15,000. It was only 3%, right?
Yeah.
So, and then you lived in it, and then by the time it hits, I think like automatically when they see that it hits 22, like it falls off. But you can call at 20, or at least maybe the values went up in your house and the community, and you got it appraised, and then you can remove the PMI. With FHA.
Right.
It stays with it.
Correct. So FHA, it's mortgage insurance for the term, for the lifetime, unless you're putting down 10% or more. If you're putting down 10% or more, it will get removed after 11 years.
After 11 years. Is that new?
That's about 2 years old.
Okay, so that's new to me. So that's
I'm
about
glad,
2
I'm glad I came into
No, totally. Because that makes sense why okay.
That's new.
Perfect. Okay.
So after 11 years,
good.
If you're putting down 10%, it will automatically get removed. Now, again, here's another thing where I look at where FHA is a lot more lenient on credit score.
Right. Yeah.
Now, I'll go down, in some cases, I'll go down to 500 on FHA.
And it'll take
it's not an everyday. And we could do a manual underwrite because in most cases, we're not going to get a DU approval under like a 580. But we'll close that loan. And for some reason, people may say, well, someone with a 500 credit score doesn't deserve finance.
No.
That's I've seen some very
shit
good people.
Happens.
Exactly.
Very good people. Divorce, ex-wife did some crazy stuff and ruined your situation.
You're right. But let me give you an example. Let's say you have an 800 credit score with someone who has a very, very, excuse me. Let's say someone has a subpar credit score. When I say subpar, let's call it 680 credit score. But they're putting down 15% or 10%. Well, let's say they're putting down 5% with a 680 credit score, but they want to go conventional. They'll get a DU approval, but a 680 credit score conventional with 5% down, that interest rate's not going to look pretty.
Right.
I'll give you an example. So if the national average is 6.2%, if you're 5% down with a 680 credit score conventional, you're going to be close. You're going to be close to 7%, 7 1/8. You might be a point higher than the national average.
So I think that's important you talking about that because people get so hung up on those numbers and like, what do you mean you're quoting me 7? I'm looking at the news and the news is saying this is the rate. And
my neighbor got 5.75.
There's so many pieces that affect that. The down payment, your credit, your reserves, there's so many things that affect that.
Yes. And we could talk about all of those things. But more importantly, and almost just as impactful, a 680 credit score at 5% down. To give you an example, the monthly mortgage insurance on conventional, if you're borrowing $400,000, could be $400 or $500 a month for mortgage insurance. So just to give you the difference, if that same individual had an 800 credit score at 5% down, might be $120.
Yeah, $130. I was going to say.
So that's a big difference. So with that conventional buyer, that conforming buyer that's going that wants to go conventional, and he has a pre-approval for a conventional financing, I'll talk to that individual. I'm like, no, you might have to move this to FHA
for the other things that make more sense.
Instead of taking 7.25%, maybe now you could be at 6 1/8 or 6 1/4 with lower monthly. So overall, your monthly payment is lower because of the mortgage insurance and the interest rate. Now, I'm not quoting rates here. This is all, these are all just fictitious, situations.
Yeah.
But, that's one area where I'm going to take a conventional buyer who's approved conventionally, but I'm going to try to talk to him about the possibility and give him the option of FHA.
Yeah.
In my opinion, that will be a better option.
Yeah, and I think that that's important too when you're working with someone like Cliff, like you're working with someone that knows what they're doing, that's done this a lot, that knows the options, that knows the products, that knows what's out there. When you're going to a big bank and you're filling out a form online and someone from another state with an 18-digit extension number is calling you and they're giving you a pre-approval with insurance that's $3,500 on a house that is like $9,000 because it's out east on the water and it's 50 years old because they don't know that you're buying in Florida because they're in Idaho. Like that's different. And they're not going to give you that detail of like digging in and helping you with the whole picture.
And that lender is not staying up at night just thinking about your file, about all those options.
They're working 9 to 5 and you can't even reach them because they have an 18-digit extension number.
I just received a DU approval the other day. Someone sent it to me to review. So a realtor wanted me to take a look. She was a listing agent. Said, "Listen, here's a DU that came in. We're debating which offer to accept." So I'm like, "All right, I'll review the DU for you." And I noticed the DTI was a little extended. The debt to income ratio was around 48%. It was a conventional loan, so it was a little extended. We didn't have much wiggle room there, but there was the DU approval, so that was still considering taking that offer. And I noticed, I looked at the DU and I looked at the principal and interest payment that they had down there on the DU approval for insurance. This was a home in Coral Springs, Florida. It was a $740,000 purchase. The home was about 25 years old. They had $115 a month for insurance.
You can't even condo insurance for that much these days. Exactly.
So I had to say, listen, insurance is going to come in more like at least $300 to $400 a month, not more. And that takes the debt ratios higher. And there were no reserves. So be careful about, taking that offer. So it's nice that you have a DU approval, but crap in, crap out.
Crap in, crap out, 100%. Yeah. And I teach a class, a bulletproofing class that I did years ago that I made. And it was basically like looking at these things. So like when I'm a buyer's agent, I'm working with a lender, like you don't really hear from me because I know what to look for, and agents should. And so when you get a pre-approval and the lender gives you a buyer comes and they're like, hey, I'm pre-approved for $500,000, like, let's go shopping. And it's like, okay, hang on. Like, let me talk to the lender. First of all, I want to ask you, Mr. Buyer, like, how much monthly do you feel comfortable spending? Okay. All right, great. Like you're renting now for $1,600 and you can like stretch $2,000. Okay, but that's not a $500,000 pre-approval. And then we have that conversation. Right. If their price, if their monthly that they're comfortable with is in line with the scope of that $500,000, which unfortunately lenders are not going to go. They don't explain those things as much. If they're not someone that's someone like you and someone that's not just a blanket. Like in another state on a phone line. So then we'll go and I'll say, okay, you know what? Let me speak to your lender. So then I look at the pre-approval. I speak to the lender. I'm like, hey, quick question. What went into this 500? Because let me tell you guys out there, 500 means nothing. It means nothing. That 500,000 means nothing because that number is backed into from what is supposed to be your like max allowable housing payment based on the ratio limitations of that particular loan program. So if you, like Cliff said, if with FHA, front end and back end, they can put you up to 57% back end and then
front end on FHA 47.
47,
well,
right?
Yeah, it's 46. You don't want to receive 47.
Right. So
and that's just the housing payment.
That's just the housing payment. And then the 57 is to capture all the other crap that you have. Right. So if you're looking at that pre-approval for 500, they came up with that. That was a byproduct of a different number. They backed into that number. So as a buyer, they're going to look at your total income. They're going to look at your debts. They're going to look and figure out what the total housing payment can be to keep you under that number that you need to stay under for conventional or FHA. And that housing payment might be, $3,000. And then they're going to take that $3,000 and they're going to say, okay, so $3,000 a month is principal, interest, taxes, insurance, mortgage insurance. And what does that translate into a home purchase price? So you can go on a website, you can go to, xyzcalculators.com. There's different ones. And you literally can plug in like $500,000. You're putting down 10%. Your interest rate, they told you, is 6, whatever it is at that time. And then you go and you fill out like the taxes. And you're going to use the seller's taxes.
Yes.
But those are going to change. And I'm looking to have the property appraiser on this show to talk about that because I have an article that I wrote as well about that. But that debt to income ratio is what they're building up to. So what Cliff was saying, as far as like looking at what the number was on the DU, if you're not looking at what built that DU, it's garbage because they're putting in a number for insurance, that's not going to be the case.
It's fantasy land.
It's a fantasy number. And you're building into, and then at that point, when you do have the real numbers, what does that happen? Well, you said his ratios were super tight.
Super tight. And you put in the real numbers and all of a sudden you go from an approval to not an approval.
Right.
And you have to figure it out and restructure.
Right.
And you don't want to restructure while you're in a contract.
No, you don't want to restructure while you're in a contract.
It's never a good thing.
No.
There's serious business here. But you made a very interesting point. You talk because people want to get pre-qualified all the time. So they call him up. I want to be pre-approved. I want to be pre-approved. So the first thing I always ask is, what's your budget? What's your what's your maximum comfort level that you need to be on a total payment with everything included, taxes, HOA, insurance? They'll give me that number because there's a big difference between that number and a number that they're really approved for. I mean, someone might be approved for a $7,000 a month payment.
Right.
Doesn't mean they want to make it. they want to be more at $3,500. So I'll give them the $3,500 number, because if I pre-approve them for a property, you're going to be taking your client to all these properties. They're going to fall in love with a property, and then they're going to talk to me about the payment and say, oh, we don't. And then they're going to look at other homes and they're going to be really disappointed. And you're going to be disappointed in me, and you're going to be wasting your time.
And it happens all the time, though.
All the time.
It happens all the time. And so where I'm, my goal with this show is to help make this industry better, because, like I said, if you're going to, as a buyer's agent, when you're getting that pre-approval, these are things, and I was talking on one of my other shows I did with a mover about, he was saying how things are tedious when you're doing background and due diligence, and it seems tedious, but it protects you. And then, the outcome is even more tedious if you don't. So I do a lot of things in advance. And before we see that property, or before we even figure out the range of where we're going, we're doing all that. Yeah, and we're confirming that, and even on my listings, when I have offers that come through and they'll send the DU, I like to see the DU, and the DU is not the DU you guys can't send. It has to go to the buyer. The buyer has to send it and give permission. So I get that. And sometimes they won't send it, and that's fine. At the end of the day, whatever. I want to know, at the very least, I send a list of questions. And those questions, one of the questions basically is, what numbers were used for maintenance, taxes, insurance, and HOA in the approval letter I have attached for the amount specified.
Right, yes.
And then they'll respond. And I'll be like, that's wonderful, but my house's insurance is $8,000. And that's they're lucky they got $8,000.
Right.
And then suddenly, I can't tell you how many offers on my listings, literally the lender, I had one a few weeks ago. The lender was great. He was like, why the hell did she show him this house? And I was like, yo, dude, I don't know, but I'm just telling you right now, the DU I got, it doesn't make sense. I have a $300 maintenance fee. He's like, I never factored in an HOA. She should not be showing him houses with an HOA because the number that you're seeing, how much is your listing? And I told him, and he's like, no, he's totally I'm going to call her. And so, agents, why are you out there? It's so easy. Learn it, figure it out, and then you can prevent this from happening.
Of course. And that's a different, it's beyond me too. Also, talk about some of the lenders who just stand in the way, or they're so combative, because you talked about, well, you can't send a DU. You shouldn't be sending a DU to the other side, to the realtor. You should send it to the borrower. Listen, I'm here to facilitate the deal for everyone. Listing agent, buyer's agent, buyers, lender, we're all one team. We all have one goal. So instead of saying, no, I can't send that.
Let me ask the buyer.
I will say, listen, have them call me. I want to talk to the agent. I want to review the DU with them. I'll tell them what I used, why this loan's going to close, why it's a good DU, why it's a good file, and why you should accept that offer.
Right.
We'll make that work. And, we also we talked about first-time home buyer, getting back into FHA. Well, it's not just for first-time home buyers. Do you realize what the loan limit now on, what the loan size is right now for 2026 for FHA? It's up to $667,000. So FHA loan limits are $667,000. That's when I first got into this business, I was thinking the other day, it was $155,000. $155,000 for FHA. It's now up to $667,000. So it means, it's not for first-time home buyers. And secondly, I'm very old.
Yeah. It dates you, that's for sure. That's for sure. Another myth, different things that people say, tougher appraisal, lower income, it just gives accessibility to buyers to be able to have a higher debt to income ratio, to be able to come in with a lower credit score.
I love it.
It just kind of breaks barriers, and I
love originating FHA loans. I think it's an easier path from point A to point B. I truly do. I wish every seller knew that. I wish every listing agent would understand that. And there are basically a couple of guidelines that make it a little more difficult to get across the goal. And one if you have a gap. If you have a gap in your employment, for example, let's say you have a 6-month gap and you weren't earning any money in that 6 months, and now you have a new job. You have a new job, you're earning money. Conventional financing will we'll approve you one day on that job. We just need, you need to have that, first pay stub or at least have HR verify, the income and all that good stuff. With FHA, if you have a gap in employment of 6 months or more and you have a new job, you have to be on that job for at least 6 months.
Oy.
So that's a guideline, but you should know that up front.
Right. So,
right.
So if you are house hunting and
right, hey,
something,
and a lot of people have been out of work for 6 months and now
right.
they have a great new job and they've been on the job for 2 months. Everything's great. They're doing well. They're making more income than they have. Sorry, you know what?
We got to wait.
Got to wait 4 more months. And that bites a lot of people, on behind.
Yeah.
So,
and if you go into it early enough too, I think, getting pre-approved, if you're thinking, all right, I'm going to make a move, I'm going to buy this year, like this is the year. And then I say, people will be like, well, I'm not ready yet. Start sending me listings. Let me see. Like, I don't want to speak to a lender because I'm not going to buy until November, right? And I'm like, all right, so you're going to speak to the lender now. Well, why? I don't need to do that. They're going to pull my credit, blah, 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 blah. And I'm like, you need to find out where you're at because if you come to me in November, 3 months before your lease expires and you're told something like what Cliff just said, well, then
it's like,
what are you going to do?
Entering a bodybuilding contest. And I'm like, I'm not going to work out because the contest is not until August 18th. So you're going to start working out on August 18th?
Yeah.
No, you're going to prepare a year before.
Right.
You have to do that with financing.
I
love it when my buyers and my borrowers come to me. Hey, I have 8 more months in my lease, but I think it's a good time to be that's
you have to be.
You have to. And
you have to be. You have to be.
And we could prepare you. We could do a soft credit pull. So we could take don't come to me with Credit Karma because that's not working. All right. I was a 750 in Credit Karma. All right. Well, you might be a 610 in the real world. You get what you pay for. But no, we could do a soft credit pull. We could take a look. They'll give us an accurate look at your credit, where you are, what we need to improve it. Because in some cases,
that time could let you improve it.
Oh,
because just like Cliff said, if you have a 680 score versus a higher score, look at the difference in the rate, look at the difference in the PMI.
Big time.
And if you can work on that and they can look and show you, all right, if you did this, if you did that, if you paid this, and also don't pay things off until you speak to the lender. Please, people, please do not pay things off until you speak to a lender. I can't tell you how many times people have paid things off and they should not have. They didn't have to. They thought they were doing the just thing. No.
Not only paying off, but closing good accounts.
Oh, yes, that
and
too.
Getting rid of that history. And I talked to, and some people, you could lead a horse to water, you can't make them drink. Look, I have this is AI. This is 2026. We have programs with one button. I will tell you exactly what you need to do to get your score up 29 points or 64 points or 12 points. Oh, no, I'm going to be doing this and doing that. No, listen to me. We have the tools.
Yeah, the modeling, the rapid rescore modeling. And sometimes
And don't do that 2 days after you sign the contract because you need an approval in 7 more days.
Yeah.
And we need to get your scores up from a 670 to a 740 in some cases, Yeah. So there's a lot you could do if you prepare early.
You have to prepare. You definitely have to prepare. I think that's one thing that many people don't do. And I think, in our industry as agents, we get like a bad rap when people say, oh, they just asked me if I was pre-approved. Or like, you're calling on someone's listing. And let's say I have family in that house. There's children, there's dogs, there's cats, there's a whole, slew of things that need to be corralled before you show up. Don't be upset that a realtor is asking you or a seller is requiring a pre-approval or a proof of funds.
Right,
Like their house is not just something that you can jump into whenever you want. Like they own that house. They have the right to be able to say, I want only a serious buyer. And guess what? If you are not pre-approved, you're not serious. I'm sorry.
Right.
You're not. And you're not going to be taken seriously. And if you're going to be taken seriously, quote unquote, it's by someone who has no business, who wants to be able, and I'm at this point, I'm like, I want, this show is to be able to make this better. But that is negligence. That is negligence in my book to be able to, to take somebody out without confirming what they can afford. And then spending Saturdays showing 6 or 7 houses bothering sellers, getting them out of their house and making them excited, right? Like, it's a tough market. Like, you're showing that house, that condo that hasn't been shown in like months or weeks. And they're like, oh my God, thank you, God. We have someone who walked through the door. And then you're trying to get feedback. And I'm trying to ask these agents for feedback and they don't answer. And then, like, you know, when I speak to some here and there, they'll be like, oh, you know, he's just starting out. He needs to speak to the lender. And I'm like, you had me take my seller and her 3 cats out of the house to try to get this quote for a buyer that's not a buyer. This is not like window
ludicrous.
Shopping. It's horrible.
Definition of craziness.
So yeah, I want to just call that out here, you know, because I think, you know, it needs to be said. And
people are afraid. They're afraid to have their credit pulled. But if you do this in advance, 8 months, you realize you could work. You're not forced to work with one lender. And I'm here to say, shop around. Yeah. Don't shop around when you're in a contract. Nope. Because you don't have time. And you're not going to make good decisions. And don't not tell your agent that you're doing it too. Right. But if you do this 8 months in advance, a year in advance, you could call as many lenders as you want. We could all pull your credit. Because if you do that within 45 days, you know, if you decide not to do that, if you do it within 45 days, it counts as only one inquiry. So shop around with 25 different lenders and work with who you feel comfortable with. Right. Or who's going to give you the best terms. Right. And again. And the best service. Listen, I'm as competitive as anybody in the country. There's always going to be someone who's going to have a lower rate, but it's not always about rate sometimes. Don't get me wrong. We're as competitive as anyone, but sometimes it's about availability. It's about education. This is a large investment. Work with somebody you trust and you feel comfortable with. No. Don't always run after the best, lowest rate. Right. That could be a problem. 100%. And there's so many things we could talk about. We didn't even talk about condos with FHA. That's my next question. Oh. You got me. That's literally the last thing that I was going to say. So condos and FHA financing and, you know, I'll say some things too. But, you know, speak about that. So FHA is a federally backed loan. Right. Well, I mean, listen, there's conventional financing, which we talked about Fannie Mae, and anything that's not anything that's not government is conventional. So that's what a conventional loan is. Now, going back to FHA, it's a government-backed insured loan. They're just ensuring that loan, you know, if there's any default, they're insuring against any loss. Effectively paid by you because that's mortgage insurance. Well, that's what you're paying the insurance. You're paying your own insurance effectively. It's not PMI. Conventional is PMI, which is private mortgage insurance. Private, We're going. It's MI. FHA is MI, mortgage insurance. It's self-funding. So, but now we're bringing in my 2 favorite topics: FHA, which I love and I think it's misunderstood, which we just talked about, and condos. Now, there's a little bit of I feel sorry for the first-time home buyer now because of the affordability issues we have with properties. And don't get me wrong, values are not going down. Values never go down. In the last 84 years, the market's been down 4 times. And overall trending up. Eventually. Prices will always go higher. So we've always had that affordability thing. But you don't have to look for that beautiful home in Boca Raton or Parkland or Coral Springs. I feel there's a great opportunity now in condos. Because where else? It's a great opportunity. They need to lessen the restrictions on FHA and condos. They need to reevaluate it. They need to evaluate a lot of so what are some of the issues, right? So condos with FHA, FHA has to go through an approval process. So you can go through an approval process. Your condo building could decide that they want to petition to be FHA approved and check and make sure they have all, but there's costs involved to that, right? Yeah. And so that's one way of doing it, which no one does. And then you can get FHA spot approval, and of these condos. What do they look at? What are they looking for? Why do these condos not pass? So basically years ago, you know, we're talking about the 1700s when I first got into this business. A lot of these condos were FHA approved. For whatever reason, they were FHA approved condos. And the ones that weren't FHA, they did what's called a spot approval, where you fill out a questionnaire form. It was like 1 or 2 pages back in the day. for a spot approval. That went away. No more for years, for 15, 20 years. No more. You were not allowed to do spot approval. So if the condo itself was not FHA, and I'm telling you, maybe there's 3 approved condos just in Boca Raton that FHA approved. Everything else you have to do it.
Lime Tree is a condo in Boynton that
like
is
gold.
approved.
That's gold.
Yeah,
that's gold. But so there was if it wasn't approved, you're out of luck. You couldn't do that home with FHA financing. So a couple of years ago, they brought back that spot approval.
And spot approval, just to clarify, spot approval is like the buyer's transaction can trigger the review of the condo for their transaction, whereas the alternative was the condo had to get their issue order and get approved by FHA.
Yes.
So that's the difference.
When they re-entered this guideline, when they accepted to do this approval again, they switched the whole questionnaire form. It went from like a 1 to 2 page to a 5-page questionnaire form. Now that the association, sometimes volunteer workers, they have to fill out a 5-page questionnaire form and
provide stuff too, the docs and
even if you left it one thing blank because you didn't know, like NA whatever, automatic denial. So everything had to be filled out. So we were educating associations for many years on that new approval. But the one thing you could look at, and immediately, which a lot of people don't realize on condos, take a look at the bylaws and the restrictions. If it's in the bylaws, when it talks about leasing your condo back or any new buyers, if it says you have to go board approved, board has to approve, that's an automatic denial. Because they consider that discriminatory.
Yes. So if the condo has an approval process of a buyer, no dice.
Right. No dice.
And
it's discriminatory.
Yeah. So that's one of
that's a quick thing to
baseline.
say. Hey,
and find me a condo in the Tri-County that doesn't have an approval process.
I'll tell you right now, it's getting a lot better. Right now, our approvals I'm just going off of our condo team, our condo desk. They're approving around 46% of these questionnaire forms that are coming in. It's about a 46% we're running. I heard the other day. So that's.
But do they have those in their docs? Like, why are they going through? They're finding condos.
Because the condos are filling out. We're doing the spot approvals, so-called spot. They're filling out the 5-page questionnaire, and out of all those, about 46% of them are getting approved.
That's a lot higher than I thought.
It's around a 2-week. It's around a 2-week process, but. You could eliminate that 2-week period by just if you could see it in there, if the bylaws are okay, it's no approval verbiage or anything like that. And they have reserves and things like that. And the insurance is up. It's a good bet. It's going to get we'll get that. We have some hardworking people on the team and we're getting those things approved. And if there's something that needs to be changed, sometimes you could talk to the association.
Yeah. So a lot of I've had a handful of condos, so many condos in the last couple of years that had insufficient insurance for various random things like crime coverage and then some other thing I can't remember. And we're like sitting there and like the lender's like, it's a problem. And then so I reach out to the association and they're like, we're not changing anything. I'm like, hang on, like, okay. And then I did it once before. So I brought it to the next condo and I'm like, all right, this is like $86. Like the other condo was like, the building was like $86. You guys are like floating around like maybe double that on a good day. Like you're literally not going to update this coverage and then prevent your condo from being able to,
Right.
And that's for FHA conventional and anything, right? They have insurance minimums.
Have proper insurance.
They have to have proper insurance. The biggest hit that we have these days is the insurance, the deductible. So
it can't exceed 5%.
5%.
Yeah.
So a lot of condos, because of the increasing costs and insurance has gotten expensive, and they don't want to have to bring the maintenance fee so much higher. They're kind of cutting back on things that end up hurting them.
And replacement cost. Do you know
replacement cost is one too?
It's Florida statute that a condo must have replacement cost. And they just don't.
And they're
just
not
breaking the laws.
Right.
And it's one person on the board who's not going to even bring it to, like, I don't think the unit owners even realize that.
No, they don't know.
You know?
No, they don't realize.
They don't realize that because their units would be a lot more marketable.
Well, even also like with the condo financing, the conventional and having less than 25% down,
Right, yeah.
is the 10% of the budget that you take in has to go towards reserves.
Right.
I've literally had budgets.
Right.
I've had budgets, and you can remove things. You can remove pass-through stuff. We won't go into that.
Right.
But I've had budgets where we've removed the heck out of everything, and we're like sitting at like 9.5%.
It's
and
beyond me. This
was like $3 a month for everyone in the community.
Just allocate.
And so the condo communities really need to be mindful of what they can do within their stuff to help get their units to be more marketable. These are things that affect them. And
they don't realize. They're like, oh, my HOAs are low. Well, again, that's fool's gold because your HOAs are low because you're not collecting enough reserves. And if something needs a repair, you're going to get a special assessment every year.
And we learned that now the hard way.
Right.
So,
but that's my passion, right? That's my whole bone of contention. There's such an opportunity because I feel a lot of that's behind us. Yeah. The condos haven't, they're still trading at discounts because of all those issues.
Yeah.
And they're all being corrected.
Yep.
Soon they're all going to have the reserves. And you could I think there's still an opportunity to now get a great condo. Where else is a first-time home buyer going to go? It's a great first home.
Yeah.
Buy it, live there, build equity, move on.
No, I was saying this for a while because I had a condo complex in Margate, and the lender said everything was good, and they messed up. They messed up big time. They're lucky I don't have time to report everyone involved, so they're very lucky. But basically, income was not calculated properly. Commission income wasn't calculated properly, and turned out the file did not end up getting approved because they were trying to push a 49-point-something% DTI on a conventional for a file with a 3% down, for a file that had like a nominal credit score. It was not going to work.
You're not getting a DU approval.
No, not going to happen. So in the background, the lender went and didn't tell us that the loan got denied for 2.5 weeks, which is a violation of the contract and their requirements.
So it was literally denied in underwriting.
Denied. And I didn't know. And I was called and asked for the condo docs. And I'm like, I don't know why I'm being called to ask for the condo docs. The condo is CMP approved with Fannie already. It was fully approved, right? It's on their list. It doesn't need a condo questionnaire. Once it's on that list for a conventional, it's good. You just need to verify insurance is good. And
you
that's
said it right there.
That's for condo conventional financing under 25%, right? So this is FHA conversation, right?
With someone on that.
So he basically did, he didn't tell us and did all this in the background and tried to qualify the condo for FHA. And the condo was undergoing milestone inspection work, and it was not done. And that was one of the questions on the thing that didn't work. And there's also a requirement of the approval process, and they very clearly have that approval process.
We got it.
And until the day of closing, nobody heard from them. For 2 weeks. No one was answering anybody. And I'm like, what the heck? And on the day of closing, they resurfaced and basically were like, the loan didn't get approved because the condo has something in their legal description and it's a garden apartment and they're not allowed to do that. I'm like, you're full of crap. Right. The condo is approved. I've sold this condo dozens of times in this community since 2016. They've always had that. They were always approved. Year over year, they've approved. And so then I said, why did you ask me for the condo docs? So then I reached out to management and found out they asked me for the condo docs because they requested an FHA condo questionnaire.
Okay.
And I was like, you didn't tell me that. I could have told you it was not going to happen.
Right. They were just trying to cover themselves.
They were covering themselves for their mistake. They were panicking. Right. And so, I think, and at that time I was very passionate about talking to someone in some sort of federal capacity to reevaluate the guidelines with FHA financing.
Because that's the difference.
Especially now with the changes and in Florida and whatever, the full reserves and, things are getting better. Like they need to reevaluate that because it is, in my opinion, in and of itself, that guideline restriction that they say is discriminatory, having that restriction, in my opinion, in and of itself is discriminatory. Because also, where does it play in? Well, a reverse mortgage, Cliff, is FHA backed, isn't it?
Yes.
Right. Yeah. So guess what? You can't get reverse mortgages in condos. No. Is that not discriminatory?
That's
because these seniors are in a position now in condos that they can't get themselves out of a hole of a maintenance fee that now has doubled or, whatever. But then where are they moving? Because they can't.
Right.
And they can't
move.
even, and there might be 70, 80, 90 years old and they plan on dying in that unit and letting it be their place. Well, they can't afford it because their payments are way too high. What are the option is for FHA, for reverses to be able to help them supplement that. And then when they pass away, it's a non-recourse loan. So it's insured. And then there's as long as you sell it for 95% of the appraised value, you're good. And there's so many things that is missing. And so we are seeing, in my opinion, like the condo market crashing because there's so many restrictions that are effectively allowing for it to do so.
Where's the common sense?
Like needs to be fixed.
We need relief. This is an obvious thing.
And that's the funny thing. When people talk about relief, they're like, oh, the government needs to give grants. The government needs these. No, the government needs to open up things like this to allow for them to get the loan and stay in their house.
And that's gonna help the affordability issue. I'm telling you.
It's gonna help the market. It's gonna help the values. It's gonna help people not be on assistance and public assistance and needing. It's like a whole trickle effect. And it just, you could hear me like say it because it's like I'm so passionate about this. I'm like, who do I need to speak to? Because this needs to be reevaluated because this one thing that is meant to not discriminate is effectively, in my opinion, discriminating at the highest level.
It's ridiculous. I think it's a ridiculous thing. I mean, I don't see it as being ridiculous, but there's things they could do for sure. And something has to be done. I mean, we have things on the new docket for property taxes, maybe for no primary properties, no taxes. But this is like an easy fix, what we're talking about now for FHA. Easy. Yeah. Open up the condo market. Everything's getting fixed. The repairs are being done.
And the funny thing is, if you're not going to open up the condo market, then that's proof, in my opinion, that you're not even confident about what's happening.
Right. Exactly.
Right. So if you've levied all these laws and regulations, but you're not going to stand behind them, then really is that like,
Yes.
So you're going to levy an opinion, but you just want to stand behind it. Right.
Yes,
so is it really like, I could talk about that, but yeah, FHA is a part of that. Reverses are FHA backed, and that
right. And we do a lot of those approvals for the condo reverse mortgage market because a lot of the seniors are in condos, and these are the ones over 62 taking reverse mortgages.
Right.
So. Yeah, and that's a great product too.
It's a great product.
FHA backed.
Yeah, it's a great product, and we'll have someone talk about that as well on another show. But tying it in, thinking about it now, it's FHA. It is FHA. It's FHA, and it ties into the condo restrictions on not being able to go that route with FHA.
I get calls every week. You're in a condo, and it's an upward battle. We're getting these things approved, but. Still over 50% are not.
And the problem, too, is we have so many condos down here. And unfortunately, with them being so these restrictions, it's not going to end well.
No.
I think they
have to just take a look at that. And to me, it's an easy fix. Hopefully, I don't think the rest of the country is seeing what we're seeing down here in Florida on the condos. It's just not. They're not.
Well, and it also is, to me, is like the fact that they're not opening it to condos. And the reason of it, like you said, is because the lines in it being discriminatory, right? Yeah. It's not because they don't trust the condo building. It's not because the condos are not a sound investment or whatever, right? It's because of a line that is considered discriminatory. Right, yes. It's kind of silly, like when you think about that, right? Yeah. So, I have a lot of passion about that. But
no, I could tell.
Did we miss anything? Yeah. Did we miss anything? Anything that you can think of?
We probably missed a lot, but we could chat again, but there's so much to talk about. But in summary, FHA is a wonderful option for for any buyer out there. And, if you have any questions about it, you could always give me a call. I'm always here to educate.
Let them know where they can reach you.
I'm always here to educate, never an obligation. And that's, one thing why I feel I'm unique. I'm always a student of this business. I've been in it for a long time, but you know what? I'm constantly learning because the guidelines are constantly changing. Oh, yeah. So you have to be a student. But for any questions, please reach out 561-213-6852.
Amazing. Thank you, Cliff. Always a pleasure. Thank you for helping me drop some knowledge here today.
Nicole, great conversation as always.
Guys out there, if you have any questions for Cliff, for me, if you found any of this information useful and, got some golden nuggets out of it, please share it. Please like it. Please comment. Share it though. Please help share it, because that's how we're going to make a difference and help educate people so that they know, everything and they can make sound informed decisions. And thank you all for joining me, and I look forward to seeing you on the next one.
Are high-interest credit cards or personal loans weighing you down? Unlock gives homeowners a smarter option. With a home equity agreement, you can tap into your home's equity for cash today, and there are no monthly payments. Here's how it works. Unlock provides funds upfront, and in exchange, shares in a portion of your home's future value. That means you keep control, with the flexibility to use your equity your way. Pay off bills, invest in home improvements, or set aside savings for peace of mind. For thousands of homeowners, Unlock has been the key to moving forward without the pressure of another payment. Put your equity to work for you. Visit unlock.com to learn more about a home equity agreement. That's unlock.com to learn more.
Terms and conditions apply. Not all homeowners will qualify. Not available in all states. Actor Portrayal. Home equity agreements are offered by Unlock Home Equity Solutions, Inc. In certain states, NMLS number 2657081. Visit www.consumeraccess.org for more info.